Hello traders. Today is the 28th of December 2010, and I hope you have enjoyed your Christmas. Okay, so we are now waiting for the New Year's Eve, the 31st of December, for some fireworks on Thames in London here. So I enjoy myself with my family as usual. Okay, having a good time. Okay, so right now I have here the Euro USD as usual. Why do we pay attention to the Euro USD? For those who are new to our video, we use the Euro USD as the market indicator. Okay, most traders use the S&P 500, which is perfectly correct. I use the Euro USD mostly to check the direction of the market. Okay, and after I check the Euro USD, if the Euro USD is giving us a clear cut indication of a bullish momentum, we will be looking for security or equity that are bullish also. And if the Euro USD is giving us a clear cut indication to sell, we will be looking for stocks that we can sell or currency that are positively correlated to the Euro USD to sell them also. Okay, but it's perfectly okay to look at the S&P 500. I look at the S&P 500 and I look at the Euro USD. For every trading decision, one must first check the direction of the market. Very important. So the first thing that you are checking, if you are about to trade, is to check the direction of the market. The Euro USD will show you the direction of the market. The S&P 500 will show you the direction of the market. After you have finished to check the direction of the market, you must first check also the sector in which you want to trade in. If you are trading stocks on the Nasdaq, you must check the direction of the Nasdaq index. Okay, if you are trading stock on the Dow Jones index, you will pay attention to the stock listed on the Dow Jones index and should check the direction of the Dow Jones index. So this is what we call a top-down trading method. After you have checked the market direction, the sector direction, now you will check the direction of the leaders in that particular sector. Like we know in the tech domain, Google and Apple are the leader in Nasdaq stock. So you will pay attention to Google and Nasdaq if you are going to trade stocks on the Nasdaq index. Okay. So and then after that, you go to the higher time frame of the stock or the commodity or the currency that you're going to trade, and you look at the higher time frame and you move from the higher time frame down to the lower time frame. If you receive a buy signal, if you receive a clear-cut buy signal on a higher time frame, and you want to enter the trade on a lower time frame, you have to wait for the lower time frame to align with the signal that you receive on the higher time frame. So if you're going to buy, suppose you receive a signal to buy on the hourly chart, and you are on the 2-hour chart or on the 3-hour chart, and you want to go on the 5-minute chart or 3-minute chart to enter your trade, you have to wait till the 3-minute chart also confirm that particular signal for you. So a buy signal received on the 4-hour chart, which you consider like your higher time frame, you go, if you choose like a 3-minute chart or 2-minute chart or whatever 10-minute chart as your entry point, you must wait for a 5-minute chart to confirm the same signal that you receive before you enter the trend. If you go to the lower time frame and the lower time frame is not confirming yet the signal that you receive on the higher time frame, you must wait for the lower time frame to align with the higher time frame before you enter the trade. This is a simple method, what we call a top-down trading method, starting from the market, the sector, the leaders of the sector of that particular sector, the stock itself, the higher time frame, down to the lower time frame, and you have to use also the tools that perfectly work for you, trading system that are valid. The second thing, after you have a trading system that works for you, you must manage the trend, and the risk management is very, very important, because if you do not have a risk management in place, you may be giving back profit after profit, going round, round, round in circle, okay? Because you want to run your trading as a business. As the new year is about to begin, okay, we will be busy, okay, creaming the market, but also applying the rules that are so important in order to maintain our dominance in the market, okay? So right here, I want to talk to you about the RSI indicator. I haven't been talking about this indicator for some time because it is not my favorite indicator. I use mostly the TSTW24 trading system. Now, for those who are using the TSTW24 trading system, now in the new year, I will be revealing to you more secret about the TSTW24 trading system because you have been using it for some time now, but you do not know all the trick that are behind the TSTW24 trading system because all the indicator, all the things that we are doing, there are a reason behind each of them. And in the new year, I will be revealing to you how we come to build the TSTW24, the reason for each indicator, okay? So you can understand clearly how we build the TSTW24 trading system. That's what I promise you in the new year. I'll reveal to you each indicator, why we choose that indicator, what's the reason behind it, and then you can understand and also to master it more so you can enjoy it more. So slowly by surely, okay, we'll get there, okay? So right here I have the RSI indicator, and it's a relative, that's what we call relative strength index, okay? It's measuring, okay, comparing, okay, the magnitude of recent gain to the recent loss, okay? So it's comparing the bearish pressure, okay, the recent bearish pressure to the recent bullish pressure. So in fact, what the RSI indicator is telling us who is winning the fight, okay? So when the RSI is above 50, which is the 50 line, okay, it's telling us that the bulls have the upper hand, and when the RSI is below the 50 line, it's telling us that the bear have the upper hand. This is why it's telling us, just comparing, okay, the price to itself, okay, comparing the price to itself. So when we see the RSI going up, okay, and the price is not rising, we know that there is a kind of increasing momentum in the market, that the price is supposed to go up. Is comparing the price to itself. So what the professionals are doing, they are looking at the RSI indicator, okay, they say the RSI indicator going up, but the price is not rising. So they know that there is a bullish momentum being built behind the scene, okay. So they are looking for opportunity to buy, okay. And when they see the RSI trending down or sloping down, okay, they know that the bearish pressure is building, and then they will compare the price. So when they see the RSI going up, but the price is going down, they will say there is a bullish divergence, okay? And when the RSI is going down, but the price is going up, they will look for opportunity to sell. This is the theory, the blah, 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 blah. Now, myself, I'm not, I'm not in the game of blah, 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 okay? I'm in the game of things that work. That's what I'm looking for. So how do we use this in real trading? Now, this is the Asian session. We do not trade the Asian session as a TSTW24 traders. I'm looking at the Euro USD on the 5-minute chart, and I post on this chart the RSI indicator, okay, period 12. Why did I choose 12? Well, I choose 12 because it suits my personality, and also we use the MACD 12, okay. So the moving average 12 is a very important moving average. So I want to track 12 candles, okay, on this chart, okay. I have other reasons also I choose 12. Many software use 14, okay, but I do not use very much this indicator, so I'm using this for educational purpose to reveal to you some of the things that you can use this RSI indicator for, okay. So it's comparing the price to itself. So when you see the RSI going up, okay, the price is supposed to go up in order to compare that there is a divergence, okay. Now, what are we looking at here? We are looking at the Euro USD on the 5-minute chart, and I have the RSI 12 here. The horizontal line that you see here on this chart, okay, is the 70 level, okay. So when the RSI is above 70, people consider it as overbought, and they will be busy looking for opportunity to sell. I will tell you for now, for those who are watching our channel, do not get into that trap, okay. When the RSI is above 70, the only time that you look for opportunity to sell is when the market is consolidating. We know the market pattern, trend, pause, trend. So when you will locate first whether the market is trending or the market is consolidating. When a market is consolidating, it means that the market is squeezed between two price levels, one resistance level and one support level. So we are waiting for the price, okay, to come to the resistance level, okay, and to show a weakness and maybe a trend line to be broken, and then we'll sell there. And we'll take profit at the next support level and look again for another opportunity to buy during the ping pong. This is why we talk about ping pong in the consolidation period. The RSI being above 17, being overbought, and to sell is only, repeat, only valid when the market is consolidating. Do not sell when the RSI is above 70 just fun, okay? This is the trouble. A lot of people say RSI above 70, they see on a daily chart, they see on a weekly chart, they see on a monthly chart, and they will sell. And sometimes they will get into trouble. That kind of trading is not a professional way of trading. It's like a gambling, in fact. We do not want to gamble. We want to get it right, okay? Market consolidating, we use the RSI. In fact, when the market is consolidating, we don't need the RSI because we have a defined price level. So we will look at the price, keep our eyes wide open, looking at the price itself, the number one indicator, full stop. But the RSI here is not a useless indicator. It's important just to help us to see what's going on and also to go into the mind of other traders, because we know that a lot of traders use the RSI indicator. So when we have it on the chart, we can spy on other traders. We know that when the RSI is here in this particular time, as it was this night, we knew that a lot of traders will be busy selling. As you can see the size of this kind of going on here. People are busy selling with their RSI. That's why the price was delayed here. But the price was looking for opportunity to break this level and go up. And people were selling. Why they were selling? Because they were taught that when the RSI is above 70, they should sell. It's wrong. It's completely wrong. When the RSI is above 70 and the price is truly consolidating, you will look not to sell. I do not tell people to sell. I will say look for opportunity to sell. Okay? You do not just jump on the price to sell because the signal is wanting. But the entry point is the most important thing. You do not just sell. The professional, they don't go to Goldman Sachs. They do not just sell. They look for opportunity to sell. So you sell when it's time to sell and you are rewarded, and you buy when it's time to buy and you are rewarded. It's just simple. If you buy when it's time to sell, you are not rewarded, okay? But you want to buy when it's time to buy and you are rewarded nicely and quickly, okay? So these people were selling here because the RSI was hitting the 70 level, but the price just went up. What you will remember in this video is the consolidation period. Market consolidating, RSI above 70, you will look for opportunity to sell. You will not just sell, you will look for opportunity to sell and wait for entry point. That's the way it works. And when the RSI is oversold, when the market is consolidating, you will look for opportunity to buy. You do not just buy, you look for opportunity to buy. What's happening? When the RSI is overbought, okay, when the market is consolidating, it's just pointing to us that the market is considered as overbought. It is considered as overbought. That's what the RSI is telling you. It's telling you, be aware, okay, that a lot of traders will be coming into the market now looking for opportunity to sell. That's how the way I read it. So when I see the RSI reach 70, I know that I need to be aware that there are other traders coming to the market at that point in time looking for opportunity to sell. So what do? If I want to buy, I will step aside and watch them until they lose the fight, as it happened right here, okay? So you are looking to buy, you see people coming to sell, you just wait. The price break above that resistance level. As you can see, the price was at resistance level here, people selling. After they failed in the attempt to sell, we'll see the price bumping out, okay? So you wait for the next pullback or you wait for another confirmation and you just take it off from there. All this candle here running fast, if these people stop, that's been taken out. The same thing when the RSI is oversold, okay? In the consolidation period, you are looking for opportunity to buy, but you wait for confirmation. What is the confirmation? The confirmation is the price itself. Even the support level, okay, because if you see the RSI is oversold, you are saying in fact that the price found a support level, okay? So if the price found a valid support level, then you will look for opportunity to buy. So when the RSI is below 30, people consider it's oversold, then you check whether the price has given you a valid support level. Okay, if the price has given you a valid support level, okay, then you look for opportunity to buy. But if that support level has failed, then you will sell, even though the RSI is below 30. The RSI is not the number one indicator. The price is the number one indicator. All the RSI is telling you is indicating to you that you are at a support level. That's all. It's telling you you are at a support level. Or be aware other traders will be looking for opportunity to buy in this zone. Okay, because it's telling you that at this level, okay, many traders consider the price as oversold, so they will be coming to buy. So what do? You step aside and watch it. Okay, you just watch it until the price itself, the number one indicator, give you a clear indication where it is going, because that's where the money is. The money is in the price. Okay, so that's how you use the RSI indicator. It's only valid in the consolidation period. Is not valid in a trending period. Now the question is, how do you use the RSI in a trending period? As it happening here, you see the RSI was first, okay, overbought, touching the 70 level, okay, in this zone here, okay. If you're on these 5 minutes only, okay, we're looking at this 5 minute time only, you make a wrong decision, okay? But if you go to a higher time frame, like a daily chart or weekly chart or monthly chart, you will see the bigger picture and know exactly what's going on. But on this 5 minute chart, you will only look for opportunity to sell here because the RSI on 5 minute chart is oversold. But you do not know what the RSI is saying on another time frame, and the higher time frame controls the lower time frame. The point I want to make here is that when the RSI, you see the RSI rising like this, okay, is bullish, okay. What you need to do is to let the price give you a clear cut, a bullish chart pattern, okay. So you see the RSI rising like this very fast. You say, okay, in this session here, you see it start rising, okay. We all see it start going up. It went down first. It was going down, and then it started rising, okay. So we see that there's a bullish momentum. The magnitude of the bulls, the power of the bull is increasing. That's why I said the power of the bull is increasing. So we acknowledge that, okay, the power of the bull is increasing. Okay, what do we need before we enter the trade? I'll tell you one of them is that when you see the momentum increasing very fast, what you have to look for, if the momentum is truly bullish, you must see resistance being broken. If the resistance are not broken, you know that is a fake, a bullish momentum, okay. The same thing, if you see the momentum going down and the support level is not broken, you know that it's a fake, a bearish momentum. You see here in this section here where I move my cursor down, okay, the momentum was going down, which is a bearish indication. It's telling that the bear are having the upper hand. Look at that, okay. That's why the indicator is telling that. The indicator is not lying. That's his job. It's just telling that the bear pressure is increasing. Okay, that's fine. We take notice of that, okay. But now look at the price itself. There was no support level being broken at all. Look at that. The price couldn't even break this support level here where I'm drawing my horizontal line, you see. Because if the bearish momentum is increasing, we must see a support level being broken. So in this particular case, you will know straight away that this is not a true bearish pressure. It's just the indicator resetting itself. So you just step aside, okay. But in this case here, if you see the momentum was increasing in this session here, okay, and suddenly what's happened? Boom. A resistance level is broken. We will acknowledge that. We will acknowledge that. You will be mad not to acknowledge that because the momentum is increasing. Now a resistance is broken. We will pay attention to that. Okay. So this is how you will use your RSI indicator in a trending period. Okay. There are more information we will give to you regarding this powerful indicator and how you will use the RSI indicator to cream the market consistently. The last point I need to make to you also regarding, we talk about the consolidation period, the trending period, okay, and the slope of the momentum, which means increasing, showing the bullish pressure, bearish pressure. Another thing you need to remember is the divergence, okay. The divergence is one of the things people don't understand, okay. Now if you want to master the subject of divergence, okay, I will do another video to you another time regarding the divergence. If you want to master a divergence, the first thing I will ask you to do is to go to www.24elliotwave.com. Okay, so you go to www.24elliotwave.com. You learn to master the subject of Elliott wave. Okay, when you finish to master the subject of Elliott wave, you can send me, okay, a quick email, okay, to ask me about a divergence, and I will explain it to you. But I will only explain the divergence, the secret of divergence to those who are using the TSTW 2420 system or the TSTW SYS08 atlas, okay? Because there are many divergences that people use in the market, but two main divergences exist in relation to the Elliott wave theory. One is a fake divergence, one is a valid divergence. You will see them all the time when you are dealing with the Elliott wave theory, okay? In the 5 ways, okay? You'll see one clear fake divergence where a lot of traders will lose money because it's so beautiful divergence, okay? And you will see traders jumping on it, okay? They will sell if it's a bearish divergence, and they will see a bullish divergence. They will be jumping on it, buying, only to see the price doing completely the opposite. This is a typical fake divergence happening all the time when it comes to Elliott wave. And there is another divergence that is a valid divergence, and that divergence, that's the divergence that I would recommend for traders to look for, and that's the valid divergence that will by all means cream the price, okay? I mean, not by all means, have a high probability to be successful, okay? But on this chart here, as you can see, there is a kind of divergence. The RSI display this high here and display a lower high, okay? Because the price compared to the RSI indicator itself, okay? Because the RSI display a lower low, but the price display a higher because the RSI display a higher high. My apology for my blah blah blah. Okay, because the RSI display a lower high here, okay, a lower high here compared to this high here, but the price display a higher high compared to this high here. There is what we call a bearish divergence, and most of the traders will look for opportunity to sell. Now, I don't want to talk about that now to confirm to you that this is a valid or not. Okay, I will leave this subject of divergence for now, and I will stop the video here. And I wish you all a happy new year. I hope you enjoyed this video that you put into practice in order to cream the market consistently. We are the TSTW 24 traders. Until the next time, enjoy yourself and be very, very happy. Thank you for watching. Speak to you soon.